This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin has very low fees, lower than many of the other crypto exchanges in the market. You can also stake your cryptocurrencies and keep 100% of the rewards. There are no fees. Other exchanges charge fees. OKCoin allows you to keep 100% of the rewards. Sign up with OKCoin, link in the description.
Hi, everyone. Welcome back to the Thinking Crypto channel. With me today is Gabor Gurbacs, Director of Digital Asset Strategy at VanEck's, and also the founder of PointsVille. Gabor, it's great to be speaking with you.
Good to hang out. Thanks for your time. Excited to be on.
Let's talk about your background. Where are you from? Where'd you grow up?
Yeah, absolutely. So I'm a Hungarian man. So I grew up in Hungary at the southern border of Hungary, just next to the Croatian border, and spent most of my life in Hungary and traveled a little bit around with my family in Europe. My parents had jobs that included travel, and so so I got to go to a number of countries. In Europe, as is a pretty small continent, I spent a little bit of time in Germany, spent a little bit of time in Croatia and Italy, and sort of like the neighboring countries in Austria. Yeah, so that's kind of, I grew up in Hungary and then went to school there up until high school, at which point I came to the US and went to Deerfield Academy to finish my high school, and went to college, stuck in Massachusetts for a number of years, went to Williams for my undergrad.
And what did you do before you started working at VanEck?
So I started working at VanEck right out of college. I look a little bit older. I'm a pretty young guy, actually. And so yeah, VanEck is sort of my first big job. Previously, I did run some businesses like when I was in school. So I ran two businesses. One of them is an archaeology business, which was ended up becoming a pretty big business in Europe. And so we excavated things, and that was kind of my passion. And I also ran a regional sort of like grant procurement job kind of company that allowed people to work who were seasonal workers during the winter. So it was kind of interesting, end of high school, college, studying in the US, running two businesses and in Europe. And so those are some things that I did before VanEck, and I had a number of teaching assistant and research jobs across some universities over summers, and did all kinds of things.
Very cool. What was your first encounter with crypto, and what was your aha moment?
Yeah, so like my first encounter with crypto wasn't really crypto, because crypto wasn't around. Bitcoin was around. And so in 2011, I was doing research at the Budapest Technical Institute, and so studying there, I met a group of people who were really excited about networks. My background is in mathematics, and I'm a fan of discrete mathematics and network theory. So this group was telling me about Bitcoin, which is supposed to be peer-to-peer cash and this fun new thing. So that was my first encounter over the summer of 2011. The group was trying to figure out how to mine Bitcoin, and it was just a fun research group, and we got excited at the same time. Interestingly, at that point of time, there were not really exchanges. So it wasn't like you can just go and buy Bitcoin at an exchange. So you had to either mine or use a faucet or get Bitcoin from someone. So there's definitely an interesting experience that kept my interest, and I was fascinated with this idea of creating money that is I call it networked money, not really peer-to-peer, but something that is very difficult to destroy.
Sure.
And my family, like, and during communism and National Socialism, the area of Hungarian place where I grew up, my family and sort of friends of the family have been impacted by totalitarian regimes, first the Nazis and then the communists. And so, we are always interested, we Hungarians specifically, about technologies that allow us to protect our currencies. And Bitcoin was particularly interesting to us as a group because it's network money that is hard to destroy. And the other characteristic was that it had a fixed supply. And the fixed supply nature was interesting because Hungary went through the largest hyperinflation in history. Imagine adding 28 zeros after your currency over the course of 5 years. So
wow.
Definitely an interesting concept, and so Hungarians still have the spirit of defending your assets and focusing on hard assets. So 2011, with an interested group of students who are trying to figure out how to mine and how to access the Bitcoin network.
So you are certainly an OG in the crypto market. You were here since the beginning, even when it wasn't even a market, right? It was just Bitcoin. And that's amazing. And now you're at VanEck leading crypto/digital asset strategy. Tell us about that and what VanEck is currently doing from a crypto perspective.
Yeah, absolutely. So, I from 2011 onwards, I was running a business. It was sort of first, I didn't know whether Bitcoin is going to be a big thing or not. And certainly my family said that, if you're studying so hard, you should get a real job as opposed to focusing on magic internet money. And for a while, they were right. And I was like, well, if I came to America to study and have a good position, so I was considering working for innovative firms, and that's how I came across VanEck. And VanEck is a firm that is established in 1955, and while it is a $85+ billion asset manager, so decently sized company, it's a private company that's also focusing on innovation, having built some of the first gold funds in the US in the 60s, having built one of the first emerging markets funds, built the first esports funds, and applied for the first Bitcoin ETF on the future side, at least, and we're very early on the physical side as well. And so I was excited to start working with VanEck, and I started there. The founder of the firm was John VanEck, who's the father of our current founder, Jan VanEck. And I was really inspired by the hard work of Jan, who is my current boss at VanEck. Jan has been just hustling, building cool funds, and providing the type of reliable, but also sort of thematic exposures that are relevant at the time, earlier than others. So I wanted to work in that space and work myself up from being an analyst to working with the CEO. Did a bunch of jobs, mostly structuring funds, creating new funds like the esports fund that we run, working on Bitcoin, and I transitioned after a while to focusing on Bitcoin and digital assets at VanEck with Jan, who is still very supportive and really is kind of helping us build the core sort of infrastructure for Bitcoin. And we can talk about it. There's a lot to it, what we have done over the past years. And
so it seems like every firm out there, and obviously VanEck being one of the big leaders in this space, are looking to get a Bitcoin ETF. But right now it seems the SEC, we don't know what's happening there and what direction Gary Gensler wants to move in. I know there's probably not a lot you can say here because these things are in regulatory review and process. Tell us about what you guys are trying to achieve with a Bitcoin ETF and getting one approved, and your vision for once that is approved.
Yeah, absolutely. So obviously, as you said it too, I can't comment on the specifics of an ETF registration. In general, I can say that yes, for a number of years now, we are trying to bring to market different access vehicles for Bitcoin. Some of them are physical access vehicles, some of them are futures based. Personal opinion is physical exposure, so buy directly idea is much better for investors, and to me it's a no-brainer to approve a structure like that. The benefit of a Bitcoin ETF is that it can be owned in brokerage account for the everyday investors. You buy your stocks and bonds and you own your Bitcoin in an ETF wrapper next to your stocks and bonds with the same protections that apply to your bonds. So stocks and bonds and funds. So you're guaranteed to get a good price that is clean, and people are not front running you. You have basically clean access and transparent access to pricing of trades. You have transparency into custody. You have different insurance and protection against bankruptcy. And we at the firm believe that providing that kind of access to investors, where they can feel safe and know that there is the same market infrastructure that has created a $20 trillion market in the US applied to them as well, it should be just granted for Bitcoin, as opposed to some of the other structures that are out there that trade at a crazy premium or discount. People are being locked into funds and try to access things from private vehicles that, again, might not have the same protection. So to me, it is a no-brainer to approve the structure that provides the best protection to investors. And it is clear that people are, other countries have approved ETPs. So VanEck has Bitcoin and digital asset ETPs in Europe. Canada, Brazil, all these countries have approved Bitcoin ETPs of different sorts. So why can't the US approve one? And you look at crypto exchanges just in the US, some of them which are publicly traded companies have tens of millions of customers that are not getting as much protection and oversight as they could. And I think, again, the market would really benefit from the ETF, and there's no good reason right now for the SEC not to approve an ETF. And again, this might be politically driven. There might be questions whether Bitcoin challenges the status of the US dollar, which is the to-go reserve and transactional currency of the world. So there's a lot at stake, but again, I think to me, it's nonsensical to let tens of millions of people access Bitcoin and be, maybe pay a lot more for transaction fees, maybe not get the same insurance, maybe not get the same access. I think the regulators are running out of excuses why not approve a Bitcoin ETF. I hope they approve one.
I'm in absolutely agreement. And to your point, we want that physically backed ETF, right? Not the futures. But I know Gary Gensler, from some of his comments, is looking to potentially a Bitcoin futures ETF getting approved. So I'm assuming you guys have both options on the table?
Yeah. So actually, VanEck was the first company to file for a futures-based ETF. That was even before futures existed, because we knew that if they're going to be a regulated futures market that trades within basically the regulatory limits and capital markets infrastructure that exists for derivatives in the US, then that market is, by definition, is as clean as you can get. And so we said, okay, there are a number of commodities like oil, for instance, one of them, natural gas, that trade pretty significant amount of volume on the futures. And some of those markets actually are futures first, because, one example would be, suppose you own a contract that allows you access to 10,000 barrels of oil. It's hard to take delivery of 10,000 barrels of oil in your backyard, no matter how big your backyard is. So, same for natural gas, same for some of the commodities. So it was impractical to have physical trading, so to speak. And for Bitcoin, it's a little bit different. You could have physical delivery. But the point is, actually, a lot of people really just want the exposure to Bitcoin. So they just trade paper Bitcoin. And there are some delivery mechanisms, but the point is, right now there's enough open interest to support an ETF on the future side. And what regulators may be thinking, and some of them are obviously thinking, that the CME futures market is regulated, hence there's no wrongdoing, there's no market manipulation, it's a clean price, it's a clean access point. So incentivize access to those regulated kind of areas and on-ramps. I think that's what they have in mind. Yeah, again, I personally think you can get. So why is this different? So the CME, like futures contracts, for instance, are federally regulated and overseen by the CFTC. Crypto trading platforms are state by state regulated, meaning that they don't have an ATS, an alternative trading system status. They don't have a brokerage status, and they don't have a federal status. So they're just small-ish, right? Some of them are $50 billion plus exchanges, but they are state by state entities, and hence federal regulators don't have any oversight. So should that stop the approval of an ETF? Personally, I don't think so. The entire insurance industry in the United States is a multi-trillion-dollar market. As of today, it's state by state regulated. Yep. There's never federal regulation, but again, this whole federal regulators are comfortable with futures-based funds and products because there is a sort of like regulatory oversight from the federal level. For the investor, there are costs involved in rolling futures contracts, getting the exposure. There is the spot market is much bigger than the futures market, so I think investors are better served with a physical product. But if there are futures product approved, I think investors are going to get access to it because some of them really like the ETF structure and holding things in their brokerage accounts. I mean, maybe investors will use foreign vehicles, and they already started doing that, right? Like they buy Canadian ETFs from their funds because there are no US ETFs. So that's I think that probably creates some level of urgency for the SEC to find at least some level of solutions to keep capital in the United States.
Now, I know at this point it's a guessing game, but what does your gut tell you? Do you think we see the approvals go out this year, or it might happen next year?
Timing, I can't comment on it. To me, that it's sort of like a when, not an if. At some point, it's got and this is my personal speculation on this, but it is logical to approve Bitcoin ETPs in the US. Otherwise, capital is just going to migrate abroad, or business will be done on a state-by-state basis. And it's really not the interest of anyone. So I'm hoping that when the SEC is, they're actually hiring out different departments. The administration just changed, so they're doing basic HR stuff, like hire the heads of departments, hire these people, create our report. So they are behind on a bunch of things. And I think soon we'll get to ETF decisions. And I'm obviously, as a biased person, I hope that it's sooner rather than later.
Sure. Tell us about the custody solutions and the price data solutions, because those were major concerns years ago. I don't think those are concerns now, but I'm curious what VanEck will be using for custody and price aggregation.
Yeah, so I can't remember if I can talk about the custody part, but on the pricing side, we're the first. So our subsidiary MBIS, it's an indexing entity that has roughly $35 billion in indexed assets, 4 of which is in crypto, which is pretty cool, actually. So we created the first regulated EU benchmark regulated indices, which are live for 4+ years at this point. And so we think that those benchmark actually solve all kinds of pricing issues. We're very granular data. We have, we're using clean data from a set of exchanges that also underlie the CME Bitcoin futures kind of contracts. So by definition, it should be a clean price feed. We've used those approved ETFs from Switzerland, Canada, and 13 countries in Europe use those price feeds to priced assets, and there's no issues. So those are the feeds that I agree with you, it's not a problem anymore. Like pricing is, you can price an asset. And we work with Crypto Compare as an early partner from that. I still think as of today, they're one of the early guys in the space. They have the best data for institutional products. They also serve some regulators, agencies, all kinds of all kinds of units and funds and hedge funds, ETPs, and so on. So pretty comfortable with that. On the custody side, there's only a few, like there's maybe one or so federally regulated bank, but like we use a solution, a third-party custodian for our assets, and just kind of separation of duties principle that is important for ETFs. Yeah, so it's not like custody right now. So the custodian has insurance and also like reg capital against any theft or losses. And while 3, 4, 5, 6 years ago, you couldn't say that we're comfortable with custody today. There's organizations figured out their insurance, cold storage procedures became pretty good, I would say, and in my opinion, there are a number of companies that are able to safeguard assets much better than banks today. So again, we feel comfortable. On the trading side, we use market makers that are large market makers for ETFs, for our other ETFs as well. That it's public information that Jane Street flow traders and DRW are crypto kind of market makers in Europe for the ETPs in Europe. And so in the US, we'll see a similar set of market makers for the ETFs. So again, not many issues. Everything is institutional quality, battle tested in Europe in 13 countries with hundreds of millions of dollars of assets. So it is, we just need the approval to move forward. The mechanics and the structure works.
Sure. Now, would the plan be once a Bitcoin ETF is approved and that's up and running, that you expand to other crypto assets like Ethereum and whatever else is in the top 10 or top 30?
And it sort of is based on business priorities, and we are considering assets that are high quality to launch ETPs. And you've seen that we have an Ethereum ETP as well in Europe, and I expect others as well. And I think it is a market. So this is my belief. So you should have access to all assets in the market. What's the merit of an asset? It's what the market decides. So it shouldn't be the job, and traditionally haven't been the job of regulators like the SEC to say that, oh, this is a good asset. Right. And even asset managers, sure, for business reasons you can select, but basically offer the market the opportunity to invest or not into an asset and let the market decide. I think it's really bad when regulators are picking winners, and it's not a good form. My personal belief, and as many know, that Bitcoin is a differentiated asset among all, and it's a completely different value proposition than the other assets. Fixed supply, clean launch, the beneficial early ownership is very different from some of the other tokens. But I would also say that some of the other tokens in the market have very specific purpose, either in the smart contracting space, and there are a number of what I call kind of like leaders in the space that I think are worth exploring, and let the market decide what to do with them.
As you guys are one of the biggest names, you mentioned just your legacy, the how long VanEck has been around. You've worked with a lot of different institutions. What is the demand or the sentiment you're seeing from those institutions for crypto? Has that been increasing? It seems like it's happening all around, that the demand is on the rise. What are you guys seeing?
So overall demand is really interesting. So we see a lot of demand, and so we have a fund, the PPDAP, which is basically offers you exposure to the top publicly traded crypto equities. So you see some of the crypto exchanges, miners, and infrastructure companies in the basket. So from the institutional side, since those are cash flow generating securities that offer some level of exposure to the crypto space, they are interested in that. So we see a lot of demand on that side. And so people want to have a basket and say, these are the cash generating winners in the space. I want to get exposure to the top 25 and then have the ETF shuffle the winners in over time. So that is sort of like a clear direction and demand that we're seeing, because a lot of institutions as of today are sort of on the edge about touching coin, if you will, meaning like you can buy if you have access to this space and you can buy stocks that will benefit from the rise of trading these assets, mining these assets, and you can own them without any regulatory uncertainty, then they will do that. So that's one. I see there's a lot of investors who are ready to invest if there is an ETF, and so that's I'm still very hopeful that it's gonna get approved, because it's a good structure that offers daily liquidity, transparency for pricing and holdings, and one kind of non-sexy topic is like tax documents. So ETFs give you like tax documents and very standard docs that you can just kind of give your accountant, and that's things are clear and not complicated. So that demand we are seeing, and the other thing maybe that's worthwhile to mention, that there's a lot of private investment going around in the space. And so we're seeing demand for some of the private, like limited partnerships, and some people are still accessing Bitcoin through LPs. We have one in the market. Don't really talk about it too much, but the people are accessing the market privately because public markets are halted by regulators, and that's kind of interesting to me.
Now, I know there's probably not a lot you can say here, but I have to ask the question, is there anything you can give us a hint on that's on the VanEck roadmap for crypto for the remainder of 2021 and maybe into 2022?
Yeah, so I can't say specifics, obviously, because it's our business to kind of win and be first. So one of the interesting things that you'll see that we have announced some partnerships already. Like for instance, with FTX, we announced a partnership on perpetual swaps on 2 indices. So you're able to trade the market and blue chips already on FTX for a crypto perp, which is really cool, I think. So we'll see a lot more crypto native partnerships and exchange partnerships on our side. So that would be one thing I can say without mentioning any specifics. The FTX part is public information, so I can say that. And I think you'll also see a number of other kind of tokens to be launched from VanEck's European business. Europe is open for business. Europe kind of is, at least 13, 14 countries are favoring crypto and want capital formation to be there. So you'll see partnerships being announced, fairly soon, actually, about a few kind of tokens that are going to be have ETPs on them.
Awesome.
And I think that goes back to my principle that markets should be free and vehicles should be available, and investors should decide what they are worth. So I'm kind of curious, actually, as for the broader market to get involved in crypto. So like, you and I spend a lot of time on Twitter and social media and YouTube, watch educational videos on your channel or just generally. And so we kind of have a pulse of what's going on, and feels like everyone is involved. But there's many, many people who are not involved and are not investing until their banks and savings and accounts and providers provide access to regulated funds. So we're trying to get that vast majority of the people involved through these funds.
Yeah, absolutely. There's just a big segment of the population who are still not involved. So totally makes sense. That's exciting. I want to go a bit off topic from crypto for a moment and talk about PointsVille, which was pretty cool when I saw that you announced that. Can you give us an overview of what is PointsVille and what can users use it for?
Yeah, absolutely. So how I like to describe PointsVille is it's Coinbase plus Pokemon Go plus Amazon combined. So it's like, yeah, this is like, I think this is the easiest description. And like, so we have wallets that look and feel like crypto wallets. We don't use any blockchains or crypto right now, but it's basically allows the everyday person to create points and rewards that are branded to you. My prediction is that we're going to see right now, I said that 4 or 5 years ago that we're going to see 10,000 tokens when there were 2 listed on Coinbase. Right now we have around 9,000 tokens roughly on the market. I actually think that we're going to see millions of brands with various tokens. And these brands are looking for launching, sort of like giving people tokens that represent rewards or access or some sort of way of engaging with people. So that's what we are providing without the craziness of trading and, you know, pre-issuances and all those kind of bad things that I think many of the crypto networks have. So, you know, we have actually, this is kind of cool. Like, we have the first pension association, $33 billion Texas State Pension Association, that onboarded with us, and they created their own point system. And it, you know, looks and feels like crypto, but no one was pre-issued anything. There's no trading in it, but you use the point system to do educational programs or give people access to events. So keeping the qualities in some ways of crypto without many of the issues that crypto suffer from, which come primarily from trading. And maybe an interesting one is, so our primary thing is that we're able to, you know, like Pokemon Go, you pull up your phone, and so you're able to, as you pull up your phone, you're able to see all these points from, you know, some of our partners include FTX, Texas Pension Fund. We announced that we work with the Pittsburgh Pirates and MLB. We work with tickets.com, ski resorts, and a broad range of companies. And so you're able to see rewards and these points and tokens that are not crypto linked, but, you know, sort of provide access to those brands that you interact with. So right now we have 20 plus companies on our platform. We have more than 50 actually as of today, just in the pipeline. So I think we're going to have probably, and that includes like smaller companies too, who want to create a rewards program like American Airlines and the big airlines or hotels. And so now, you know, now, like, for instance, like, you can create a rewards program in 3 minutes and push your educational points into AR. So we open up that platform to everyone. And so you can advertise yourself and own your customers, as opposed to, like, you know, Facebook, YouTube, LinkedIn, who are kind of obfuscating who is interacting with you.
So walk me through this, and maybe so I can wrap my head around it a bit. There's an app. I can go in, create a reward system, let's say from my channel, Thinking Crypto Points or whatever it is, and people who interact with that can earn rewards. And the rewards, I can assign, I guess, the respective value of how they can leverage those points.
Exactly. So there are two. There's an application, the PointsVille app. It's in the Apple Store and the Google Play or Android Store. And when you download the app, you're able to see all the brands that are in our network there. So you're able to earn points 2 major ways. One is if you watch educational videos, like, for instance, your YouTube channel, then you can get Thinking Crypto points. And after you watch 5 videos, you know, you can get a discount for something or a gift card, or so that's one way to earn. You can also enter augmented reality and collect these points around you if you go to specific places, like a treasure hunt. And so those are the 2 ways you can earn. So in the platform, and then there's a shopping page where the brands like Hue, for instance, or FTX, or, you know, Pirates, they upload what items you can redeem, basically your shopping items. And this could be a badge, that educational badge. This is what some of our financial companies and pension funds do. like, hey, after completing 5 courses, this badge certifies that you have, received educational status. And then we have AMAs, for instance, an AMA with you. BitTorrent has an AMA with Justin's son. PointsVille has an AMA with me. So after connecting certain amounts of points, you can have a private discussion. And then, and so those are the interesting ones. And we're also maybe, I guess that's the fun part. A lot of people like cash, so you're able to issue through the platform Visa gift cards to people, so actual cards. And those cards are spendable wherever a Visa is spendable, and you get 5% cash back at 109 stores on that. So it's kind of cool, and we opened it up to the everyday person. So like our clients go into a website where you have your control panel, so you can control where your points are in AR. You can control what videos you would attach points to. So it gives you we also have like a wallet. You can send points to your friends. You can redeem it. You can scan QR. So it's kind of creating the crypto experience without the crypto railways, which are often problematic for regulatory reasons. So we want to stay clean and so this is my thesis behind all of this. Some of the crypto projects are protocol technologies. Usually protocol technologies are zero-sum games. So from a game theory perspective, there's going to be a few winners who will be, focusing on sound money like Bitcoin. There's going to be a few platforms who win smart contracting platforms. There's going to be a few applications that will be useful, but many of the coins are probably not going to be around, and large brands and even small brands will want to do, kind of your own thing. So why can't you just do your own thing without all the crazy trading and without actually issuing an internet protocol as opposed to just using the tokens, right? So that is what's taking our current 10,000 cryptocurrencies to 1 million and to 1 million brands as opposed to cryptos. And so anyways, that's why we built PointsVille. And another concurrent trend that I think is interesting is I firmly believe that in 10 years, large media companies like YouTube, Facebook, LinkedIn, Twitter will have to pay their users for eyeball time. So you're a creator, you have an excellent channel, you're getting a little bit of something back from those platforms, but the vast majority is kept by the platforms. So we want to refocus that to allow creators to actually directly interact with customers and keep the vast majority of revenues and kind of own your customers as opposed to those large corporations owning your customers. And at the same time, you as a creator can pay your customers in points, which will then give people status. Sort of what like NFTs, in my opinion, are a stepping stone to this kind of direction. Sure. We're just trying to do it a little bit more cleanly. So I guess that's a quick summary.
I love the idea, and it absolutely makes sense. And I love the decentralized nature of it. The fact that someone like myself, I'm not a company, I'm not some big brand, but I can go do that and create a reward system with my community. That's pretty cool.
Yeah. It's trying to keep that principle of like opening up platforms, and you can open up platforms multiple ways, not just by issuing cryptocurrencies, but by just giving control to people. And that's what we are trying to do.
So I have to ask, what was the genesis of the idea? How did it come about that you were like, you know what, I want to do this?
So a few things. Like one is that the idea that there's so many protocols and tokens out there that are nonsense, and literally they're issuing us, oh, this is going to be the new underlying network of the internet, and we know that it's the TCP/IP protocol that's the underlying. So so these companies are trying to either like raise money, trade, or compete in the protocol space, and I think most of these applications are missing the main use case, which is connecting communities with brands and like educational material and content. So we wanted to solely focus on that and provide technology that scales without all the mess that is happening in crypto. Already when we started seeing like the rise of Ethereum and ICOs and all the kind of, that is, many of the projects there have been lingering around but haven't been used. Like many of the ICOs from 2017 when you started your channels, they have disappeared or they are kind of dead with a crazy market cap. And so we wanted to, but people were excited about this experience of offering their own brand. So basically that's what we were doing. That sort of like, I think the ICO craze was badly executed, and in my opinion, led to a lot of fraud, scam, and disappointments. And at the same time, I think what people wanted is to create their own thing, that's useful. So that was driving the process. And fortunately, we also had an early, really interested partner, which was the Pittsburgh Pirates, from MLB, and they were, especially during COVID, they were looking for new ways to interact with fans. And we asked a question like, what if sports never comes back? How do you interact? Like, by never, I mean like very limited. Stadiums were empty for almost a year and a half. So so that was driving the latest kind of stage of development and the app. Yeah.
Wow, I love it. And I'm gonna have to definitely look into this. We'll talk offline about it.
That's good.
But let's talk more about the crypto market before we wrap it up. Okay, the big news. Gary Gensler spoke to the Senate Banking Committee yesterday. He's talking about stable coins being securities, which I find ridiculous. Looking at Coinbase and exchanges, looks like they want to go after him. We have the major lawsuit against Ripple over XRP. What are your thoughts on what is going on here? And do you see Congress maybe having to step in?
Look, I think regulators are running their own agenda. If you listen to the hearing yesterday and all the congressmen and congresswomen and senators are asking questions that clearly the vast majority of American people and American decision makers want crypto to flourish in this country. Regulators are simply too slow, and they're not doing their job, allowing or creating a way or frameworks to allow the flourishment of this industry in the United States. And I think senators are saying that this is like, we need to put down our foot. People and decision makers want this. Why are regulators holding up things in red tape? So that is my number one comment, that it's clear to me that leaders and leaders, decision makers from Congress and from the House are on the same page with American people that this industry should stay in the US and should be allowed to flourish in some guidelines. And I think it's a real shame that regulators cannot make up their mind and write a simple 2-page guidance. Some of these agencies have thousands of employees, and I think it's absolutely needed to move forward with their guidance one way or another. And I also think that many of the regulators are overstepping their mandate. We earlier touched base on that previously the SEC did not make merit-based decision on approving an ETF. They literally just reviewed whether the disclosure was appropriate. Doesn't feel like it today. And so again, my comment is, I have no idea how a regulatory agency, state agency, can just hold up everything when the industry people and leaders are pushing to actually make things happen. We're being leapfrogged by China and literally every nation on earth. So what I make of it is, I think, just from the comments, questions that I'm here, the actual decision makers seem to be pretty pissed that we don't have any progress.
Yeah, absolutely. And, a lot of people are focused on the lawsuit with the SEC has against Ripple because where they're looking to see what the outcome is, because the rest of the crypto market could potentially use that to their advantage, right? That look, the SEC did not give fair notice on crypto regulations. They still haven't. It's kind of a black box there. Was XRP a security at a certain period of time, of 2013 to 2015? Possibly. Is it now? I don't think so, because the network has become decentralized. But a lot of crypto projects are in the same boat, right? They started out, this was a new thing. What are your thoughts on this lawsuit and potential outcome?
Yeah, first, in general, I would say the issue is the lack of guidance. Howey tests are unclear. The entire regulatory structures about tokens are unclear. So people just don't know. And I think we deserve guidance. And in fact, that's why agencies exist. And that's why taxpayers are shelling out billions of dollars to fund these agencies to provide guidance. So we should know. If I look at the top 100 list of coins, I think the regulators should have an opinion of this is a security, this is not a security. And I think that clarity, we deserve that. So that is not in place. So specifically to Ripple, I think, and again, like this is just personal opinions, like they seem to be unfairly picked out from the crowd, because there are a number of other tokens that are in a similar sort of boat. So why Ripple? I saw an infographic on the other day saying that countries where XRP might be a security, and then it says United States. Countries where XRP is a currency, there's like 100 countries on that list, and it is sort of my feeling as well. Like, why is it just going against Ripple? I think what we need is definitive guidance of what's a security in the crypto space. Most people cannot, and even with really expensive lawyers, cannot interpret laws from 1933 and 1940, which drive our securities decision making, and apply to assets that were created a few years ago, completely electronically, under completely different frameworks. So I'm just, I'm not sure why is it so hard to give guidance to people. I do not support the whole regular, like this was, I think, one of the senators were asking, like, why do you lead by enforcement as opposed to guidance? You could lead by guidance. And like, I don't think it's fair to American companies where we see Chinese companies and foreign securities not being treated in the same way with enforcement versus American companies who are going enforcement first because we can't provide guidance by agencies that have thousands of employees whose job is to provide guidance. Like, so I think it's really weird. And I think, the House and Congress are looking to say that, please provide guidance. And I'm really hoping that there will be an ETA on that too, because that seems to be the biggest issue. And there's no clock that is kind of running on regulators. And at the same time, like the best companies that could have generated billions in taxes in the US are moving away from here because they're like, well, I'm sorry, like I can't work in a jurisdiction where we don't know what the status of a project is. So,
right.
Yeah.
Let's talk about Bitcoin, because and just the juxtaposition of when you were, looking at Bitcoin in 2011 to where we're at now, countries making it a legal tender, and El Salvador, companies putting it on their balance sheet. Just amazing what's Bitcoin's growth. And I want to ask if you feel we are still in a bull market, and if you have a Bitcoin price prediction as well.
Yeah, so regarding adoption, I think we are, and El Salvador adopting Bitcoin, which is kind of old news by now. But some of the other, and I speak to finance ministers. Actually, a number of them are friends of mine in the sort of like Meso and South American space, and they're actually looking at Bitcoin as sort of like a reserve asset in the space, and we talk about gold being a central bank and reserve asset to hedge against inflation. I think those conversations are happening, and not just the countries that you're seeing in the news today, but a much broader set to just complement gold as an inflation hedge. A number of countries who are worried about inflation actually increased their gold reserves, and they're looking to potentially adopt other assets. And many of these countries are they don't want to avoid sanctions. They don't want to have any issues with any, the US or any sort of like financial groups. All they want to do is to make sure that their asset is not depreciating. So what I'm always happy to have this conversation. Obviously, like in 2011, I did not have the country making Bitcoin legal tender is, just maybe hopes and dreams. But what I think will be interesting was when central banks actually use Bitcoin as a reserve currency themselves. And right now, the largest, I think 75% of all gold is held by central banks as an inflation hedge. For instance, my own country, Hungary, has, if I remember well, more than doubled its gold reserves over the past 5 years. So so people are actually concerned about inflation creeping up, which clearly is in multiple countries. And I think the next big adoption curve for Bitcoin is, one, legalizing it in a number of countries. Some of the countries will say, we accept Bitcoin, it's legal to use, please invest into our countries. Because those countries, like, you go to El Salvador, you go to Panama, or like you go to some of these countries, and a few $1 billion of investment makes a huge difference and can start a generational wealth trend for millions of people. So they say, yeah, I don't want to get squeezed by the IMF and get sanctions when I have this technology that can make my people prosper. So anyways, I'm looking to South and Mesoamerica and some of the Central Eastern European countries. Also, Ukraine is, for instance, public information that they're considering, but there are other countries in the region who are looking into Bitcoin and digital assets. So I think that's the bullish scenario. I don't have a price target for you. I can't speculate. But maybe let's just do a thought experiment, right? Like right now, Bitcoin, what is it? Like under $1 trillion, right? And let's just say that we are sitting at, like, I don't know, 45K, just for the sake of argument, and around, let's say 50K and 1 trillion, just, for the sake of argument. Sure. If Bitcoin, like gold's market, I like to use gold as an analogy because we have this firm VanEck has a history of, one of the longest history with gold, and we run the 2 largest gold miner ETFs in the world, and so they're big, and so so I think gold is a good analogy. Like if Bitcoin can be a store of value and be used as a complement to gold, and let's just say it reaches half of its market capitalization, then we could have a 5x upside. So, a $250,000 Bitcoin in that framework is not a crazy thing, especially if we haven't seen any central bank adoption. We haven't seen many countries adopt Bitcoin. There's no ETFs in the US, and most people are sitting on the sidelines. And so, I think as a potential, half of gold's market capitalization, even that number could get Bitcoin, up 5x. On the other side of the equation, to be fair, if the crypto market were to collapse, for instance, broadly, including Bitcoin sell-offs, burning through leverage loans to public companies would sell, then we could see Bitcoin, I think, under the 2017 lows. So I think we could, we have seen Bitcoin at 3,000. I don't believe that we're going to see Bitcoin at 3,000, but there can be a scenario where Bitcoin could go back to the 10-20 range. In my opinion, in that range, a lot of institutions would load up. It's just my opinion. Kind of trying to put a mental model around their process. Yeah.
I want to talk about NFTs. Do you own any? And is VanEck looking to do anything with NFTs?
I can't comment again on my portfolios. That's one core principle I have. And, on the NFT side, I think, the interesting part of it is, NFT started bringing money and trading into illiquid assets like art, and incentivize people to create art. At the same time, most of the activity is related to speculating, gambling, and trading. And I personally don't think and my father used to say that the best assets are not meant to be traded, because you would not have anything else other than that asset. So the art market is like that, actually, the physical art market, at least. If you want, a piece of history, you buy the painting, you don't want to fractionalize it, you don't want to NFT it. Your ownership, physical ownership of the actual art piece is what gives you joy, and this is what you would have. I think NFTs are sort of like, here's a digital key to something that's replicable, that can be, right-clicked and saved, and maybe you don't own the copyright to it, but a lot of it, I think, is sort of speculation-driven. In my opinion, this is actually, again, one of the things that PointsVille is executing very well. What we are doing is we're using, we don't call them NFTs kind of on the platform, but we call them badges or access keys to some actual rights. Like if you if you own this badge, then you get a 10% discount. So it's actionable, it's useful, and it's not focusing on speculation. So I'm interested in applications of collectibles, not just NFTs, but all sorts of collectibles that grant you rights to things like accessing a stadium, like getting a game ticket, like having access to an AMA, like educational badges that give you rights to view content before others. And I think those are the applications that are meant to last. And the speculation and the front running and cross trading stuff that is happening in NFTs today, most of it is not meant to last.
Yeah, I think to your point, there's a lot of hype around it, but we'll see what actually stays and has longevity coming out of it. Real quick, I want to ask you about digital dollar and CBDCs. Seems like every central bank around the world is getting on board now. They're using the blockchain tech to build a digital fiat. Do you think these same fiat problems we have now continue in the digital version, or will this help curb some of the money printing?
Yeah, so I actually do talk to a lot of central banks and sort of their head of innovation who create these currencies, and I think they're inherently still centralized. And I usually say, like, blockchains are, if you're inherently centralized, I don't see any problems with centralization. There are some, but like I think centralization can be efficient. There's no point to a blockchain. Like, why use a blockchain to do these currencies where blockchains are helpful for coordinating enemies and differing kind of opinions, but 5 countries, let's just say 5 countries want to launch a CBDC and agree on rules. How long does it take to agree on a random small political thing for 5 countries, let alone 20 or an entire economic region? Like, it takes decades. So I think those issues will prevail that are inherently human, coordination issues with central bank digital currencies. I think what's interesting about them is a lot of the payment companies and banks and payment channels today got very expensive because they are, they need to comply by regulation. They are effectively, there's I don't want to say a cartel, but a monopoly group of payment processors who are able to provide services to most companies, and they are charging the heck out of people. Like if you go to one of those big payment companies, they can charge you anywhere between 2 to 15% for a hotel stay, and FX charges and redemption fees, and you end up like, and you start thinking about it, like, what if, for instance, CBDCs or which I believe in more just regular corporate-based stablecoins are more efficient. Like, I think that's where there is potential to lower fees and create sort of like a better experience for the average person. If you go to an airport and ever want to withdraw money or buy something, like, no chance. And it's like, why? The technology is here,
right?
And so I'm Mark Carney from the Bank of England used to say that, there is like, it is the payment companies who are being disrupted. And actually we need a disruption because the monopolies that these companies have built up are actually impacting our, our people, our business, our potential for no good reason. So I think that's where the potential of CBDCs are. What I think is going to be most effective is partnerships with private companies. So I think banks, payment companies, and stablecoin companies should be part of CBDC plans as opposed to a government implemented top-down type of initiative. So for instance, I think CBDCs should probably use Tether or USDC as an underlying, because they are proven, they have distribution, and corporate partners actually can do a better job than governments. So that's what I'm hoping for, that central banks will have enough humility to recognize that the industry can do a better job than central banks.
I want to wrap it up here with some quick rapid fire questions, such as, what's your favorite food?
I like American hamburgers. I like a good Kobe burger, very simple guy. So I just like hamburgers.
Favorite musician or band?
Don't really have any specifics. I do like classical music and trance music. That's a good mix, but I listen to everything. I also like folk music, used to folk dance. So like everything. Yeah.
Awesome. Favorite movie?
Inception. I don't know. I don't really have many favorites like documentaries, and for some reason Inception always sticks in my mind. Yeah.
Favorite book?
Generally like books. The most recent ones I liked was Extreme Ownership by Jocko Willink, who was a veteran in the Afghanistan war, and it's about basically how, as a leader, you own every mistake that your team does. And I think it's a very good book that I recently read. Yeah.
Awesome. And when you're not at VanEck or doing anything at PointsVille, what are you doing for fun as a hobby?
Yeah, that's actually what my wife usually asks about. I don't have many hobbies. My hobbies right now are pretty much work. But yeah, I do like to walk, and I do like nature. So occasionally going on hikes is what I do, and I'm hoping to do more of it. But right now I'm sort of, building PointsVille and building out VanEck products. So that's my focus.
Awesome. Well, Gabor, a pleasure chatting with you. Thank you so much for joining me today.
Yeah, thank you so much. It was fun hanging out.